One of the reasons investors look to FedEx ground routes is because they're a very tax-friendly business model. FedEx ground routes have similar tax benefits as other businesses, but they also have some tax benefits that are unique to the FedEx ground industry. One of the significant ways that they do this is by strategically accounting for asset depreciation and accelerated depreciation. The IRS looks at both profits and losses to calculate your business's tax burden. So the more revenue your business is making, the higher the tax liability will be. Your business can also show financial losses. Losses reduce the overall business income and the corresponding tax liability. The more you reduce your overall income by showing losses, the less your business will pay in taxes. One way to reduce your tax burden is vehicle depreciation. These businesses include a substantial number of vehicles that you can depreciate over time. The vehicle depreciation in FedEx route businesses allows you to offset the revenue stream from your business. IRS depreciation tables depreciate vehicles over 5 years. This means that the value of each vehicle in your fleet reduces by 20% each year on your balance sheet. So if a truck costs you $70,000 to purchase new, you can record a loss of $14,000 each year for 5 years after purchasing it. This recorded loss will help offset the taxes your business has to pay each year. You can also use an accelerated depreciation schedule. For example, let's say your truck depreciates 50% over 2 years rather than 20% over 5 years. Accelerated depreciation will allow you to claim higher losses in a year where you had higher than expected revenue, which keeps your tax burden low. It's important to understand that when you choose an accelerated depreciation schedule, you have to stick with that new schedule. Adjusting the tax schedule for an asset more than once will put your business at risk for an audit. We advise working closely with a CPA to plan your depreciation schedule and your vehicle purchase strategy. FedEx ground routes are also eligible for some more unique tax benefits. Many FedEx ground route businesses take advantage of the rolling stock exemption. The availability and rules of this exemption are going to vary by state though. In general, the exemption says that if you purchase a business vehicle intending to lease it, you do not have to pay sales tax. Keep in mind that repairs and repair parts for leased vehicles are also not subject to any sales tax. The rolling stock exemption can save your business from incurring large expenses. FedEx Ground businesses operate as 1099 contractors to FedEx Ground. There are many tax write-offs available to 1099 contractors that you should discuss with your CPA. These write-offs will include things like mortgages, leases, cell phones, computers, travel, fuel, and more. All or a portion of these can be looked at as expenses, so make sure you're thorough. Your write-off claims need to hold up under an audit. If you have questions about the tax advantages of FedEx ground routes, reach out to our team.